Welcome to this income tax class. Income tax class. Today we are going to discuss income from house property. This is a very simple problem, and of course it's a basic problem. So far we discussed some of the typical problems, essay type questions in computation of income from a house property. But all cannot understand those typical problem. So, for want of a better understanding, easy understanding, I have chosen this topic. This is the problem taken from Income Tax by Girish Ahuja, problem number 5.7. Let us go to that problem. Mr. K constructed a house in Hubli, consisting 2 units. That consists of 2 units, and on that 1 unit is used for his own occupation, another 1 unit is let out property. That let out property is fetched with the income. Since the rent is collected for that let out property, it is attached with the income, whereas in case of the self occupied property, no income is connected with that. Since no income is connected and it is a self occupied property, the municipal value is 0. Annual rent is also 0. Obviously, gross annual value is 0. Since the municipal value itself is 0, self occupied property, so municipal tax is also 0. And standard deduction 30% is not applicable for this self occupied property because values are nil, so no standard deduction. The one and only information applicable for self occupied property is interest on loan. That interest on loan is given as the total value, which is 30,000, construction of the house. See, in the beginning of the question, it is given that the property consists of 2 units. 1 unit is self occupied and another 1 unit is let out property. It is given as the self occupied portion was 2/5 of the house. Then obviously 3/5 of the house is let out. So, interest on loan, it is given as a 30,000. So, we have to take for self-occupied property, the amount of interest is 2/5. That comes to 12,000. Okay. Then coming to the let out property. Municipal value, total amount given for let out property, we are taking as total amount of municipal value, that comes to 80,000. On that let out property is 2/5 because 3/5 because 2/5 is self occupied, so 3/5 we have to take. Then annual rent is 6,000 rupees per month, so 6,000 into 12 we have to take. Gross annual value, you know very well, whichever is higher, municipal value or annual rent, whichever is higher, that is gross annual value minus municipal tax. Total amount of municipal tax, which is total amount of the tax is given as 6,000. On that let out portion is 3/5, that we are taking proportionate amount we are taking, that comes to 3,600. Then net annual value we got. On that 30% we should calculate for standard deduction. Interest on loan, please look on that problem. For interest on loan, we are given with 2 points. One is construction of the house, 30,000. Another one is purchase of car. Please mind it, interest on loan, on that we have to take only interest on loan borrowed for construction, repair, renovation, etc. Only those things can be taken, only those things can be considered for this. See, in this case, it is given as interest on loan for construction of the house. So, for self-occupied property, we are taking interest on loan for construction 12,000. Another one is a let out property, 3/5 total amount. On that 3/5 we should take, that is 30,000, 3/5 we should take. That comes to 18,000. So, net annual value minus the deductions, balance is the income from the house property. That income from house property, which is 29,880, and for self-occupied property naturally we got the loss. So income minus the loss, balance amount available, that is income is 17,880, right? So this is, of course, though it is a simple problem, this is a qualified question for essay type section C. Okay, so you practice these types of a problem for getting the basic knowledge. After that you can go for some typical and standard questions, right? But at the same time, though it is a simple problem, this will also be asked for essay type.